Hey guys, how are you all today? I hope your day has been going very, very well. So let's skip the introductions because who cares about the introductions, I guess? Well, we do, but we don't. Today we're going to be talking about 7 stocks to buy in September 2022. So it's kind of like not necessarily you have to go and buy these stocks. We're just looking over stocks, discussing weaknesses, discussing positives, and discussing are they good stocks to buy. So there is this YouTuber called Charlie Chang. He's an American YouTuber, I believe, and he's in the business/investing space. And every month he comes out with a list of stocks that I believe he's recommending to buy them, the stocks that he likes basically. So this month, September 2022, he has recommended 7 stocks to buy in September 2022. So I want to take a quick look at them and discuss, are they good stocks to buy? I guess that's what we're going to be doing. So let's get straight into it.
So the stock market has been pretty crazy recently, with Jerome Powell's Jackson Hole comments resulting in stocks plummeting, as well as a bunch of other economic factors. And while now is a scary time to invest as the markets could
Well, stocks have been plummeting this year, but as of late they have gone up. So let's look at the S&P 500. This is a good indicator of the overall market year to date. What's happened this year? Yes, they plummeted a lot, but as of recently, they're up. As of June, 17th of June, they're up by 8%. So are they plummeting? Is this a plummet here? Not really, not really. We're up since June, yeah, but overall, yes, the market is down by a lot. So anyway,
definitely continue falling.
Let's take a look at the first stock that he's recommending. So stock 1.
Now let's get started. So the first stock we're talking about today is Tesla.
Wow, Tesla. So there's no surprise that Tesla's in this list. Tesla's on the list of basically every YouTuber that I see, apart from Everything Money. They're like a value investing YouTube community. But most YouTube influencers, they are obsessed with Tesla stock. So, okay, the number 1 stock here is Tesla. It does not surprise me. But let's see his reasons why he likes Tesla.
The stock ticker TSLA. Tesla is an American multinational.
Yeah, we all know what Tesla is.
Auto and $88.09. Although prices are slipping, and after hours it's gone down to $284.60.
Wow, it's gone down by $4. What a big dip. $4, who cares? It doesn't matter. $4 is nothing.
If we take a look at the 1-year price chart, you can see that there have been some pretty wild swings for this stock. We hit 3 highs in November, January, as well as April of this year, but we did see a pretty big tumble back in May, followed by a pretty good recovery until now. Tesla has a market cap with $300.907 billion, P ratio of 35.48, and
a crazy market cap, right, on Tesla? $300 billion? So Tesla stock, right now, the market cap is... Why does it say that? It's not 868. Let's have a look on Yahoo Finance. Yahoo Finance will give us a better idea. Right now, their market cap... Why does it say 868 billion? Is their market cap 868 billion or $300 billion like in Charlie Chang's video? Give me 2 seconds. I'm going to go figure that out. Okay, everyone, so it looks like Tesla's market cap is actually $860 billion. It's not $300 billion as per Charlie Chang's video. I'm not sure. Maybe there was just a mistake. We'll give him the benefit of the doubt. Their market cap is not $300 billion at a price of $280 a share. It is actually $860 billion. So it's more than double that. Either way, $860 billion for a car company. I believe one of the, okay, let's look at the other big car company stocks. So Toyota stock. Their market cap is $200 billion. So, Tesla is 4 times bigger than Toyota. So even Ford stock, Ford's market cap is $61 billion. So Tesla is over 12 times bigger than Ford. So Tesla is by far the biggest car company, but is it deserved?
An earnings per share of $35.48. If we take a look at their valuation measures, we can see that they have a 5-year expected PEG ratio of 2.11 and a price to book ratio of 25.5. Their profitability numbers.
Well, price to book of 25.5 is ridiculously high. You know, if you that means if you sell your entire business, you'll get $1 compared to every $25 that you paid in terms of share price. So it's 25 times higher than the book value of the business. So that is really high, but it is expected for a car company, high growth stock.
Show a profit margin of 14.17%, and right now their return on equity is going to be 29.89%.
That's a really good return on equity. That's very, very high. But are you willing to pay that very high price for a high return on equity?
Which is very strong. In the last 12 months, they've seen revenue of $67.17 billion. And if you take a look at their balance sheet.
So $67 billion of revenue, you are paying over 10 times the amount in just revenue, not even profit, 10 times the revenue to buy this stock. That is very, very high. So obviously Tesla, investors are expecting Tesla to grow by an absolute metric ton. They expect the revenue just to shoot up massively.
We can see that they have total cash of $18.92 billion and a current ratio of 1.43.
Total cash of $19 billion and you pay $860 billion to buy the entire company. So that cash is basically nothing compared to the price you pay.
It's always interesting to see what analysts have to say. So on a scale of 1 to 5, 1 being a strong buy and 5 being a sell, analysts are rating Tesla as a 2.3, meaning it is a buy.
I mean, I'm going to be honest, I don't know how much you guys really trust the analyst rating. They generally recommend stocks that have done well over the years, and if stocks have done bad, they'll call it a hold or a underperform or a sell. That's what I've seen. They like stocks that have done well over the short term.
And right now, the average analyst price target is $306.10, which is a few percent over the current price of $288.09. So since Thursday, Tesla stock has been much cheaper due to a 3-for-1 stock split after the closing bell on Wednesday. This is beneficial for retail investors because now it's much more easy to own at least one share of the stock. Meanwhile, investors who've held on to stock for a long time will still retain.
I still want to see why Charlie likes the stock Tesla so much.
In the same price. It's really expensive per share that it must cut down its stock price to bring in more investors is an awesome sign. And Tesla, being known as the innovator in EV manufacturing, has sent shockwaves throughout the rest of the auto industry. Recently, Ford laid off 3,000 employees just to cut costs as the company transitions to EV. And based on the company's most recent earnings report, which occurred during the middle of last month, we can definitely see why Tesla is now the face and model of the automobile industry. The company's revenues increased year over year by around 42% to $16.9 billion, while the company's gross profits increased year over year by around 47% to $4.2 billion. So
basically, Charlie likes the fact that their revenue is grown by so much and their gross profits have grown by so much, which is good. But the real question is, do they justify that massive high price that they're selling for? Let me know what you think in the comments below. Are you willing to pay such a high price for a car company, over 4 times higher than I think Toyota's the second biggest, close to the second biggest, over 4 times higher than close to the second biggest car company? Are you willing to pay that price? Let me know in the comments below your different thoughts on buying Tesla or not.
All right, the next stock we're talking about is VOO, which is the Vanguard S&P 500 Index Fund.
So yeah, I like the fact that he's mentioned an index fund here. Index funds are just a good way to enter the market, the overall market as a whole. You own a ton of different stocks in S&P 500, that's the USA, so you own 500 big companies in the USA, small parts of it. It's a good way of diversifying your portfolio. So I do like the fact that he's recommended an index fund in his list. Let's see what else he has though.
All right, third on our list is Apple.
Apple, typical. Again, it's a very well recommended stock. Apple is one of those solid picks. I mean, Warren Buffett, this is his largest position. It's a company that the customers love their products. I mean, iPhone, I'm not going to be switching from my iPhone. I'm not going to be switching from my MacBook. I love Apple, and I think it is a good business to own. So, okay, I like the fact he's recommended Apple. It's a solid stock. I mean, in this video, we can see that he's got something of Warren Buffett and Charlie Munger talking about their Apple purchase.
Be leveraged into other services that the company offers. Everyone sees this. Warren Buffett, arguably the most successful in
Yeah, so Warren Buffett, he's a big fan of Apple. What else does Charlie have in his list for September 2022?
on this list. All right, so next up is Walmart stock.
Walmart. Okay, again, it's another solid business. You know, it's a retail business. It's got lots of customers. It's spread throughout the USA. They got stores everywhere. It's a nice, cheap store. Everyone knows it. So again, it's a solid income earner. We can have a little bit of a look at what he says. Why not?
Ticker WMT. Walmart is an American multinational retail.
Yeah, we all know what Walmart is.
Right now, one share of Walmart is trading at $131.
PE ratio of 26, that's pretty high for such a well-established company. Are you prepared to pay 26 times higher than the earnings of the business, a price 26 times higher, for a business that's so well-established and it's not as high growth as a lot of other companies? I'm not sure if I would be willing to pay that much, but Charlie obviously doesn't mind it. But, you know, everyone's allowed their own opinion, aren't they?
Are holding for the long term. All right, so next up is Procter Gamble, stock ticker PG. This is an American multinational consumer goods corporation known for its family care.
Yeah, they have so many different brands, so many different products. He said multinational. It's throughout the world. Even where I'm right now, you know, they sell all their products. So it's a company that's spread out. It's got a diversified way of earning money through so many different products. So yeah, good business, good business.
Sanitary care, home care, and other popular household brands. Right now, one share of Procter Gamble is trading at...
Again, very high PE ratio for such an established business. PE ratio of 24. Is that worth it? Is that worth it?
$142.29 with a 52-week low of $129.50 and a 52-week high of $165.
Honestly, I don't really care too much about 52-week lows and highs and whatever.
And 35 cents. Here's a one-year price chart. We can see that 1 year ago they were trading at 4.49, earnings per share of $5.81, and they actually paid pretty great dividend of 2.45%.
That is a good dividend, 2.45% in this market. Pretty handy, pretty stable. And I believe they've paid their dividend, from my memory, they've paid their dividend consistently for a long period of time. And what I mean by this is they haven't decreased their dividend for a long period of time, which is a good sign for a stable sort of source of revenue, a stable source of dividend income if you own it in your portfolio, if they have a good history of paying dividends consistently. So Procter & Gamble, again, it's pretty less risky stock, we can say that. Traditional stock for people to recommend and own in their portfolio.
Please be keeping your eye on. Okay, next up is Bank of America, stock ticker BAC. This is an American multinational investment bank.
Again, this is another Warren Buffett stock. I think it's his 4th largest position, something like that. We'll take a quick look at Warren Buffett's portfolio at Berkshire Hathaway, but I believe he owns quite a lot of Bank of America. Berkshire Hathaway. Enter. Warren Buffett portfolio, Datarama. Datarama is quite a good website for looking at the portfolio of people. No, it's his 2nd largest position. So he owns, his 2nd largest stock is Bank of America. 10.5% of his portfolio is Bank of America. Banks, personally for me, I stay away from banks because I don't fully understand the ins and outs of how they work. It's not my type of business that I like to own, because how do banks actually make their money? I don't fully understand it. Hence, I don't think I have a competitive advantage over other investors to know if it's a better stock to own than other stocks, if that makes sense. So that's just for me. If you like owning banks, let me know why you like owning banks in the comment section below. On this channel, I know we don't have that many viewers yet. Hopefully in the future we'll get more viewers, but let me know if you like owning bank stocks below, and why do you like owning bank stocks, and especially in this market, okay? Let's see his last stock. Stock 7.
I included it on this list. All right, so last up is Cisco, stock ticker CSCO. Cisco Systems is an American multinational tech company specializing in network hardware, software, telecommunications, and other high-tech products and services. Right now, one share of
It's a bit of a tough business to understand. Telecommunications. So do they build the telecommunication systems? I'm not quite sure.
Cisco is trading at $45.89 with a 52-week low of $40.82 and a 52-week high of $64.29.
He loves looking at the price chart, doesn't he? Which is fine. I prefer looking at the fundamentals. $190 billion, very valuable company, high value company. And 3.2% dividend. That's a very nice dividend in this market with these prices, 3.2%. And the PE ratio is a lot lower than a lot of the other stocks that he's recommended. But would you want to own this type of business? Do you fully understand Cisco and how it works? This is all up to you. I'm just throwing out my opinion on these different stocks, but you know, let me know in the comment section below if out of all of these, which one would you buy in September 2022? And are these value plays for you? Would you want to own them for the long term, or are these just buy and see them grow and then sell? You know, are they more growth plays, or are you guys traders? You know, you look at the ticker, the little, you know, ticker symbols, how they're done over the short term, and you try trade them. I personally stay far away from trading. I believe it's very, very hard to make money being a trader. It can be very, very volatile and easy to lose money. I like to be a value investor, long term, buy and hold. That's my type of investing anyway. So yeah, he's got a good mix of companies here. He's got, you know, Apple, Walmart, some stable stocks, stable business models. Bank of America, good, strong business models. And then he's got the more riskier ones like Tesla. But Tesla, don't get me wrong, Tesla is an amazing business model. I mean, I want to buy a Tesla. Maybe when I make a little bit more money, I'll probably buy one. I can't afford one, but I am slowly paying off my mortgage. So I want to get that paid off before I buy an expensive car. But yeah, Tesla, their products are amazing. People are in love with Tesla products. But the big question with Tesla is, do they justify that $800 billion market cap? You know, that price so high. Investors are so obsessed with the stock. And I don't know, when so many people are obsessed with the stock, I'm a bit wary of it. That's just the way I think. Obviously, I'm sure a lot of you are going to be thinking different to the way I think, and that is fine. It's a debate. You put your opinion below in the comment section. I'll look at it. As I say, I don't know how many comments we'll get because this channel is very small and we don't have that many people viewing it, but I am going to be looking to grow it more because, I don't know, I just like these types of videos where I can just talk away and have a bit of fun and free flow as opposed to having everything so structured. It can get a bit boring. I'm not sure, do you guys get bored when you watch those videos that are so structured and so like researched to a T, like written down to a T? Or do you prefer the free-flowing videos that you're seeing now? I don't know. To be honest, I prefer making these types of videos where I can just look at things and just tell you my the opinion that comes to my head straight away, instead of being like political about it. I can just say what I want to say. But yeah, hopefully you enjoyed the video. Let me know if you like any of these stocks below and why. What is the reason why? And are there any negatives? What are the positives? What are the negatives? Be interested to know your opinions. So guys, that's it for a video, and I'm going to try upload more consistently on this channel. So make sure to subscribe, hit the bell, like the video. Cool. Thank you for watching.